After every tragedy, every natural disaster, eyes inevitably turn toward the future, toward rebuilding both homes, schools, and businesses, but also a sense of comfort and security in their community. But in fire-ravaged Southern California, it may not be so simple. For the last few years, some insurance companies have stopped offering fire coverage, or others have pulled out of the state entirely as we march toward what some experts are calling an uninsurable future, leaving so many with limited or no options to protect themselves and start over. How did this happen, and what does it mean for the future of natural disaster-prone states? ABC News investigates. Here's our chief national correspondent, Matt Gutman.
For weeks, we watched as parts of the City of Angels burned.
Everything is catching fire here!
The flames scorching everything in sight.
You feel how powerful that wind is.
A wind-fueled inferno where gusts approached 100 miles an hour. The most destructive fires I've covered in my 24 years as a reporter. So far, about 13,000 structures have been destroyed, an estimated tens of billions of dollars in economic losses. We've come to expect that insurance companies will fill the gap, but the destruction here is so vast and the costs so high, there are questions whether there will be enough insurance money to rebuild. It's a nationwide trend in the wake of disasters amplified by climate change that some experts say is part of our uninsurable future. And homeowners like Jules Fawn are on the front lines. On Tuesday, January 7th, she'd been on a walk when her husband Terry called. He was panicked, telling her they needed to evacuate right away.
This fire's getting worse.
If I just would have gone back earlier, I could have taken pictures, albums. They're things that are not monetarily worth anything, but sentimental and mean so much, and I won't ever get to see again.
Jules and Terry are now living in a hotel with their dog, Coda. Almost everything they had went up in flames. They'll have to file a claim under the California FAIR Plan to see what they can get for the total loss of their home. The FAIR Plan is the insurance of last resort here in case of fire damage, but now nearly 500,000 Californian households are on it. It's typically more expensive with more limited coverage. The Fawns had to sign on after State Farm didn't renew their fire policy last fall, just a few months before the fire destroyed their home.
We've been a State Farm customer for more than 20 years. We paid on time. We never made a claim. There's no reason for them to drop us.
State Farm is in the business of risk. It's the largest property and casualty insurance provider in California and in the nation. Its advertisements promise to be there for you in times of need.
Like a good neighbor, State Farm is there.
Hey, Dave.
Like a good neighbor, State Farm is there is not ringing true right now.
State Farm, they betrayed us.
In a letter to the Fawns that they provided to ABC News, State Farm cited substantial wildfire hazard as part of the reason they decided not to renew their fire policy. State Farm told ABC News that their non-renewal decisions were not made lightly and only after careful analysis of their future capacity to serve their customers. They also said that they understand this is a very difficult time for those impacted by these wildfires and that they are on the ground helping our customers recover. Additionally, they said that they have already put over $500 million back into customers' hands since the start of the wildfires this year. State Farm's decision is now increasingly common among insurance companies who are dropping customers in California.
Insurers absolutely want to be doing business in a state like California.
Sean Kevelin, the CEO of the Insurance Information Institute, says this decision to not renew customers in California was inevitable. But that's not what the companies want. He blames California regulators who adjust rates on behalf of their consumers. He says they've kept rates too low to accurately reflect the amount of risk in the state.
When they're forced to underwrite in a way that's simply just not profitable, and they have to send those non-renewal notices that you're talking about.
But regulators disagree. They say they're keeping rates fair and affordable for Californians. But it's why insurance companies say they're walking away from people like the Fawns rather than risking losing money.
We spoke to several consumers in California.
one of whom had been with State Farm for over 20 years. And she felt betrayed, she said, by State Farm when they didn't renew her.
Insurers are not making these decisions in an easy manner, but they are at a point where it's been decades at which they've been unable to price insurance in California in a way that reflects the high level of risk.
But still, other California homeowners, even those who didn't lose their homes in the LA fires, say they also felt betrayed by their insurance companies. ABC News finding a class action lawsuit outside San Diego where plaintiffs are suing Liberty Mutual, alleging they engaged in, quote, unlawful and fraudulent actions to wrongfully drop homeowners' policies.
I got a letter in August telling me that it's not going to be renewed, my policy. And they told me that I have algae, moss, mildew in my roof.
Liberty Mutual had taken an aerial photo of her home.
I couldn't see what the arrow was showing, so I decided to hire a contractor to inspect my roof.
The contractor found her roof to be in incredible shape.
I went back to the insurance company telling them what the inspector told me. They said, there is no way will insure your home.
Since filing this lawsuit, I've talked to over 100 people with very similar stories. They've challenged it in the same fashion Maria had and came out with the same result that Maria did.
Liberty Mutual told ABC News that they could not comment on pending litigation. Have you heard of lawsuits like this, and what's your take on it?
My take is that we have a significant legal system abuse problem in the United States as it relates to the insurance industry. More often than not, the consumer is going to litigation first when it used to be a last resort.
But Michelle believes this case is indicative of issues in the wider industry.
I think that they have done a very good job of being like, poor us, there's fires, there's floods, there's storms. And what they leave out of that is the fact that they're making more money than they ever have.
They're supposed to be a risk-bearing industry, but now even the slightest hint of what might be a new risk, and they're walking away. The insurance companies have bulked up their profits even as they were walking away from our state and our communities.
The property and casualty insurance industry, which includes homeowners, auto, and business, altogether made record profits in 2023 with $88 billion. Last year, they shattered that record, making $130 billion in the first 9 months of the year.
A primary rule of being in business is to be profitable. So taking aggregate figures from an industry that represents a large amount of our economy and employs over 3 million people in this country, I think we want to also put it into perspective about these large numbers that we're talking about here.
Climate-related events have caused substantial damage, resulting in insurance companies issuing large payouts. A Senate committee found that insured losses from natural disasters in the U.S. now routinely approach $100 billion a year.
The homeowners insurance market has been more challenging for the insurance companies, but they still have so much money to invest that they are doing fine. They're using this recognition of increased disasters as a chance to change the rules of the game so that they have to take on less risk and earn more premium.
Less risk for the insurance industry has meant pulling back from a number of states. ABC News analyzed data to find that the industry was issuing non-renewals most frequently in 10 states that saw extreme weather like hurricanes or wildfires, with average premiums increasing by 33% between 2020 and 2023, and areas with severe weather events taking an even bigger hit.
The way they respond to that is by raising price and writing less insurance. But in the long term, that gets outrun by the fact that climate change is only getting worse.
Dave Jones served 2 terms as the California Insurance Commissioner. These national insurance carriers are obviously for-profit companies. Should we blame them from pulling out of places where they think they're going to lose their shirts?
The major driver of climate change is our failure to transition from fossil fuels and greenhouse gas emitting industries. The U.S. insurance industry invests over $500 billion in the fossil fuel industry. Why are U.S. insurers allowed to invest over $500 billion in the very industry, the fossil fuel industry, whose emissions are making it challenging, if not impossible, for them to write insurance for real people and real businesses?
I would argue that the investments of the insurance industry are far outweighed with the likes of bonds and fixed investments that are doing more for community building. Regardless of where you stand, our world is reliant on fossil fuels. This industry is dedicated to keeping capital on hand for the long term so it can pay its claims.
As for Jules and Terry, they're still struggling to understand why their insurance company wasn't there for them as a safety net.
Well, an insurance company is supposed to protect you. That's why they're there. So it makes no sense why they would drop us or anyone else, especially when they have the funds to insure people.
So many similar heartbreaking stories. Our thanks to Matt Gutman for that.